Hello, thanks for joining us once again on the latest episode of Chem Art by SCT. Today we've got an exciting guest, an expert in the financial banking field. Today we're going to kind of take a look at where the industry and small and medium businesses are with regards to lending, traditional lending, non-traditional lending, and the future of what the banking industry is going to look like after COVID-19 is over and hopefully most people go back to an office, or if there's even going to be an office to go back to. But for right now, I want to say welcome, Dan Goldberg.
Thank you.
With Pinnacle Financial Partners. Welcome. Glad to have you on the show. Through COVID, everyone was really concerned with how is lending going to be handled. PPP, an acronym that no one knew, a year and a half ago. The Small Business Administration absolutely was not prepared for that. Right. Kind of go into, from a person on the inside, a year ago, in March of 20, when the idea of the government helping out struggling businesses, what did that look like? How did you guys prepare for that? And what was the ramp up of that?
That was a really interesting ramp up. It was really kind of a flash flood, so to speak. So when the banks were given the direction to start taking some of these PPP applications, some of the governance for the SBA program wasn't even given out yet.
Right.
So it was, and you'd see things as, we were going into the office every day on weekends trying to walk people through this process at Pinnacle. I mean, we were there at nights. We were there on Easter weekend.
Oh my gosh.
Yeah. It was crazy.
Did you hide eggs while you were there and do a little,
I called my wife and said Happy Easter. But anyway, we were getting all of these, what they call interim final rules. Well, that's kind of an oxymoron. I mean, is it interim or is it final? It's just final for now.
Right.
And so whatever that was, we would then immediately give that information to our clients so that they would be more informed. But it was constantly changing. And there was just a lot of fear, a lot of rushing to the polls, so to speak.
Exactly.
Jamming those things through as quick as we could, trying to get the SBA to give us some solid governance and answers to all of the questions that were being thrown at us. Right. And it was coming one after another. So it was something else. Fortunately, 100% of the folks that came to us that applied got their applications in.
Oh, that's amazing.
It was.
That's amazing. What did that number look like? I mean, how many applications did you process?
Holy cow. I know in Chattanooga itself, I could tell you that it was tens of millions of dollars.
Wow.
It was tens of millions of dollars.
And when all this was going on, I know that as a business owner, we were having these conversations amongst ourselves in the chemical industry. We weren't, shutting down per se. It was keeping things going, hopefully not having an outbreak of COVID in our business that wipes everyone out for weeks. I know companies that happened to.
Of course.
So the question was, this is like an insurance policy for us. Mm-hmm. If the inevitable or the worst case scenario, we've got to shut the whole company down for 2 weeks. We're still going to be able to make payroll and not have to lay anyone off. Mm-hmm. At any point, did you as an industry say, where's this money coming from, and are we ever going to be able to pay this back?
I say that to myself all the time.
Right.
I say that to myself with the PPP program and all the other stimulus money that's out. How is it ever going to get paid back? I mean, or are kids going to be paying an 80% tax bracket when this is all done? I mean, I don't know the answer to that. My biggest concern, honestly, Cameron, was I have got to help these people. I understand what they're going through. This is their livelihood, their families at stake.
Right.
How do we, as a partner, help these people to keep their people employed?
Right.
through this time, and it was just as simple as that. And that was the motivator.
It was
that
disaster
was
relief.
It
at
really
that point.
was.
It was disaster relief. Yeah.
Quite frankly, that was my biggest concern through this. And after the fact, we're sort of getting through that second round of PPP funding now, and a lot of the other stimulus programs are sort of winding down, other than this big one that just got passed.
So was the second round smoother? I mean,
Yes.
it had to be.
It is. It is. What was really interesting through this, though, is, when people got this money, they were so concerned about being forgiven, and all of this dialogue was coming out through the SBA on, hey, now that you've gotten this money, we're going to start trying to audit you if you've borrowed more than $2 million. And there was so much fear that was created.
Right.
And I thought to myself, this is, on the application itself, there was a question that had to do with uncertainty. Well, quite frankly, I'm going to take this. If I'm any business owner in my right mind, I'm going to take this money, because there isn't one person on this earth that wasn't uncertain when this came out.
That's true.
And so, you know what? You don't know. And maybe your business is doing well, but maybe your customers aren't. Maybe your suppliers aren't.
Exactly.
And you know what? I have to keep this thing afloat, and I have to keep these folks employed through this lull in the economy, because we decided to shut this thing down. It's not going to turn back on like this. And I've got to keep these people employed. So
we came through the first bout coming out of a complete lockdown. The country seems to be opening up. The world's starting to open up. Now as an industry, we have a whole host of other issues, and that's, filling global demand, tightening of raw materials, another natural disaster, that's happened in the Gulf of Mexico. We're going to continue to have some issues. How in the lending industry are you seeing, we're beginning to get through the second round of stimulus with PPP. Mm-hmm. Now we're going to have another burden with cash flow issues with some of these companies where their vendors are completely locked out of product, allocation force majeure. So you're going to have a lull for maybe, we don't know, 60 days, possibly 90 days. How does, as a lending institution, how do you look at those situations?
Okay. Yes, you have shipping issues, you have demand, you have supply. Supply is a big problem, and especially with Texas and everything, especially in the chemical industry right now in Texas, getting those supplies, and your demand doesn't go away. So, and that's the key. Bottom line is you have to look at more than just what's happening right now. You have to look at the history of the business. You have to understand, and I think right now with COVID and everything, people are starting to be a little bit more cognizant about budgeting and understanding what their projections are going to be, and strategically planning on making those projections and all of those things. But these are non-recurring issues.
Okay.
Right? So it's a matter of, do I believe in the management of this company, historically how they've run it? Do I believe in where they are going? How well have they planned for where they're going? What is their strategy? Understanding that this is more of a deferral versus a loss of business.
Right.
You put that all into play, and that's how you look at it from a more of a common sense approach. There are many businesses that, as a matter of fact, I'm onboarding one today that through 2019 and 20, they were not profitable.
Really?
No, they weren't. Now, I'm just saying this for myself because, and I'm going to speak for myself and not for other bankers or the banks, but I think if you're an experienced banker and you can understand credit risk by looking at the whole picture, pre-COVID, planning, meet the management, understand what that plan is, you get a pretty good idea of what you're buying off on. And I'd say that if you can see this and quantify it as a non-recurring issue,
exactly,
then you take the risk on a company that has good management and has a good plan.
Well, as a business owner, that's great to hear. That's fantastic news. It's really good. You and I have spoken, previously and helping us get through the PPP process, and it was extremely helpful, extremely easy. We've never actually had that conversation that we just had. So, that's really good news to hear, because it is uncertain times, and, it just seems like it's compounding one after another. Right now, 2021 is making 2020 look like a vacation, at this point for the chemical industry.
I'll say this, and I think this is really important. When it comes to underwriting and looking at a business, I think the whole underwriting landscape needs to change a little bit. History does not necessarily indicate what the future is going to be now.
Right.
For a long time, when banks look at requests from a business,
right,
it's solely on historical performance. That's ridiculous to think that is really going to help you gauge on credit risk today.
Okay.
I think what COVID is doing is it's helping bankers and business owners collaborate and understand what the projections of this company are going to look like.
Okay.
And the planning and strategizing of all of the activities that will help to quantify that.
Right.
And that's really what you're banking on at this point. Because, listen, if I'm going to underwrite something on 2019 and 20, I'm not going to give any loans to anybody.
Yeah.
Do you know what I mean?
No, I'm with you.
You have to have common sense. You have to understand that, listen, if you can quantify what's going to happen in the future and you're a good planner, and it's forcing these business owners to really look at that. There are a lot of times you'll go into a business and they don't plan for the future. They have just planned for, hey, this is what we plan to do this month, and boom, boom, boom. So it's really kind of helped.
So that kind of goes back into, another topic that I want to discuss with you. As businesses are opening up, the market's opening up more and more. In our chemical industry, the demand is ramping up dramatically. Business owners and partner companies are coming looking for capital to traditional lending. But then we've got private equity and private funding sitting out there that's gobbling up and offering. The multipliers are very enticing, right now to go down that path. And I'm assuming you would look at that as a competitor to banking and traditional lending, the private financial market, the private lending market,
the private financial market, the private equity groups.
Yeah.
Banks work hand in hand with private equity groups. The issue has been in 2020 alone, and this is where it's largely tech, but there are a lot of other industries that that go into this number. But private equity groups in 2020, 11 times EBITDA. The multiples are ridiculous.
On average.
Yes.
Across every sector.
There's a lot of lumps in that number.
Right.
So there's a lot of tech in there, and there's a lot of other industries in there. But yeah, so when you look at the whole, it's 11 times EBITDA. And the other issue is that there's 7 times EBITDA on the leverage side. So you are levering up that EBITDA, that earnings before interest, taxes, depreciation, and amortization, 7 times. The problem with that is when a private equity group does that, it makes it very difficult for a bank to finance them, because banks today still are shy about going above 3 times senior, 4 times total, meaning a bank will lend you on your normalized EBITDA with a private equity group up to 3 times that money. And they'll say to you, if you want to go out and get another source of financing, whether it's mezz finance or another source, we'll allow for another turn.
Oh my gosh.
So you think about that.
Yeah.
That's 4 times. They want it levered 7. So there are other non-banking institutions that are providing that. That's where our competition is really coming in on those higher levered deals.
Yeah, but that's also increasing risk.
Of course it is. But here's the thing. Here's why the private equity groups are so smart. First of all, there's tons of liquidity on the street. Banks have it now more than ever. Private equity groups have it. When you're buying in a lull, you think about this. you're not worried so much about your expenses anymore, because the expenses probably work themselves out to the point where now I'm selling this thing. All you're focused on is raising revenue.
Exactly.
So at that point, basically, you're just looking at ways to bolt on and do things to raise that revenue so that you can re-lever up at that point. So it's only a temporary fix. So after a couple of years, first of all, you're getting new business. You're adding on new businesses to this other business that you've acquired. Mm-hmm. Well, that additional EBITDA will allow you to take out that expensive secondary debt and put it with primary debt, so it becomes cheaper for the private equity group.
Is there a ceiling for the levering up? We don't know yet.
I don't know.
We don't know yet.
I don't know. A private equity group can do whatever they want as long as they can get financed.
I guess we'll wait and see on that.
Yeah, right.
It's
not a deal I'd necessarily want to do.
Right. Well, talking about the different types of funding. I mean, we're in an age you can't turn on a TV or radio station now without somebody talking about Bitcoin, as a secondary currency market. Traditional currency is your industry. What is this? Obviously, Elon Musk likes it. Bought a lot, and you can buy a Tesla with Bitcoin. I don't think you can buy a house yet with Bitcoin. Where do you see this going?
Buy a 6-pack of beer with Bitcoin?
Yeah. No. Where do you see this going?
Okay, so this is just speculation, but I've always thought it was interesting when they took Bitcoin and compared the volatility to a tech company, the stock market.
Yeah.
A tech company, you've got a stock. It's a piece of a company, but you're comparing it to a currency that's showing the same volatility as this, and yet you're trying to implement this currency to be a way to purchase goods and services. And my thought is, there are some progressive companies that feel comfortable doing that, but I would think that you're going to have to find some stability in the value,
my fear right
predictability.
My fear right now is, I own a Bitcoin, and now it's worth, $53,000 or something like that. My wife and I go to Vegas. We're in a Four Seasons villa, or the Caesars, villa, and you get the bill and it's $15,000. Well, that's nothing. When we checked in, my Bitcoin's worth 53 grand. I can afford this. When we check out, it's worth $8.
Yeah. So how are you supposed to do that? I mean,
yeah, exactly.
It's interesting, when you do a transaction through MasterCard and Visa, it's an instant transaction.
Right.
You do it through Bitcoin, it takes some time.
Yeah.
I think they're down to like 10 minutes.
Right.
But it takes some time. Because
right.
I don't know how to reconcile that whole thing.
You have to unlock it.
And from what I understand, there's about 85% of all Bitcoin is owned by 1% of the wallet addresses, which is
that's
bizarre.
A little scary.
Yeah, it's bizarre. So I'm thinking, like, in my mind, there are going to be different quote unquote strains of this cryptocurrency, which will, I guess, help. This is just me speculating. Help to perhaps even it out a little bit and maybe cause some of the volatility to sort of go away. But I just don't know. I just don't know how the masses are going to accept that as a means of payment. Just don't know.
Yeah, the chapter's yet to be written on that. As we're getting our life back to somewhat normal, you and I have both agreed we don't have COVID, so we're relatively 6 feet apart. You were talking about when you were first going through the PPP program. You're in the office, everyone's going crazy. Obviously, you're not in the office anymore on a day-to-day basis. What is the industry? What is your industry talking about Class A real estate for these banks? What do branches look like? I mean, everything now, you don't even need to walk into a branch to do anything.
That's true. Mm-hmm. And I think this is just sort of help accelerate it. Quite frankly, I am in the office. It's a rare occasion. I have friends in the industry that are working for some of the larger regional banks in the area that they still don't know when they're going to come back to work.
Really?
And, you know, there are some banks out there that have efficiency ratio issues, you know? And this is going to help banks to kind of reevaluate, do we really need all of this space if we're able to work remotely and be as effective? The real issue, though, Cameron, is culture.
Right.
Culture is extremely important to some banks. And I know I can only speak for ours, that is critically important. So for us, I mean, we're not branch heavy anyway. Branches are extremely expensive to run. To your point, it's you know, $2-3 million a year easily to run a branch. And if you're in an area where you can do electronic banking, you can do mobile banking, you can do just about anything. There's still going to be some of those rural areas where people just find a lot of value in just face-to-face contact.
Right.
I think there's always going to be that.
Yeah.
Culture is important. Face-to-face contact is going to be important. But to your point, I think you're going to see a lot of the space vacated.
Yeah.
And I think a lot of that overhead expense is going to have to kind of go away. You know, right now, banks also, you know, with the interest rate environment, you know, we're being squeezed. You know, our margins are being squeezed. And, you know, just like any other business, we're trying to find different ways to make money and to cut expenses. So it's been eye-opening.
Yeah, not many people taking out CDs, you know, right now you get a less than 1% interest rate.
That's crazy.
Yeah, that's going to be challenging. For a while.
If you're looking for a bank to earn money in an interest checking account or a money market, good luck. Yeah,
going back to lending. Yeah. You know, capital lending. You're still very, very bullish on blue chip companies, you know, the traditional companies, especially like chemical companies, that you know the demand is still high.
Yeah, your demand hasn't gone away. It's to your point, you've got supply issues, but you don't have demand issues.
Right.
Your demand is there. You just got to supply it. So yeah, we are bullish. I mean, first of all, banks have a ton of liquidity right now, and if you're not making that money overnight or you're going to have to lend it out to make margins. You've got to deploy those funds. And so
sounds like another expansion's in line for SCT.
CapEx spend for the next
That's
year.
Exactly right. Yeah. That's exactly right. Well, Dan, thanks for taking time, sitting down with us. You know, this is a topic mostly everyone's talking about right now. You know, from second round of stimulus to how do I expand? Where does the money come from? You know, is it time for me to get an exit strategy? You know, because I don't want to go through this again. Yeah. And you definitely shed some light on alternatives and paths and what the lending market looks like. Yeah. So for that, thank you. Dan Goldberg, Pinnacle Financial Partners, obviously an expert in this field. Thanks for coming down and sitting around our lovely set for ChemArt.
It's awesome. Thank you for having me. I appreciate it.
Great seeing you again.
Yeah, you too.